I don't know who started the argument that since physical gold can be stolen, you should not buy it. If घर के अंदर से गोल्ड चोरी हो सकता है तो फिर इससे ज्यादा इजी तो ये है कि घर के बाहर से आपके कार्स या बाइक्स भी चोरी हो सकते हैं. So that logic doesn't stand at all. Did you know that over the last 20 years, the Nifty 50 index has given a CAGR of 14.9%. Gold, on the other hand, has delivered an average return of 11.2% during the same period. Gold shines brightest during tough times. And please stop comparing gold with equities or mutual funds to decide which is better. Rather, consider keeping both in your portfolio. Gold is often seen as a shield against currency depreciation. The idea is that if the rupee depreciates, the rise in value of gold in rupee terms could help offset losses in other parts of your portfolio. You might know that diversification is best achieved by investing in uncorrelated assets. Uncorrelated assets are those assets whose prices don't move in the same direction. Why is China buying so much gold? One reason is fear. Just look at recent geopolitical tensions. China holds a large amount of US dollars, over $3 trillion as of last month. For context, India has around $600 billion. Hello people, I am Suraj Deo and welcome back to Deo Talks. Today we are talking about something timeless, that is gold. Gold has always been a classic investment, and for good reason. It's not just about growing your wealth, it's about having a reliable safety net. Think of gold as your long-term insurance policy, not just a quick investment. So stay with me until the end of this video and you'll learn everything about why gold is a must-have in your portfolio. This video has two sections. First, we will explore why you should invest in gold, including its impressive past performance, resilience during tough times, and its ability to protect your wealth when the rupee loses value. We will also discuss how gold can diversify your investments. Then towards the end of this video, we will discuss why gold prices have gone up so much recently, and we'll focus on the massive gold purchases by central banks around the world. Alright, section 1. Why you and I should invest in gold. Reason number 1. Gold's historical performance and resilience. Did you know that over the last 20 years, the Nifty 50 index has given a CAGR of 14.9%. Gold, on the other hand, has delivered an average return of 11.2% during the same period. In fact, gold has given an average annual return of 9.6% over the past 40 years. You might think that Nifty or Sensex has given a better returns compared to gold. But here's a catch. Gold has performed exceptionally well and outperformed stock market returns by huge margins during uncertain times, such as the Indian currency crisis, the dot-com bubble, the global financial crisis, and the COVID-19 pandemic. You can see on the screen how the Nifty had huge negative returns throughout these periods due to various global events, while gold remained strong in the same period, acting as a reliable hedge against market volatility. So it's fair to say that gold shines brightest during tough times. It often outperforms in periods of high inflation, economic risk, and geopolitical turmoil. Therefore, gold must be a part of your portfolio to support you in these uncertain times. Number 2. Gold is tangible. Physical gold is one of the few assets that is tangible, meaning you can see and touch it. This quality creates a perception of safety among investors. Unlike other tangible assets like real estate, buying gold is relatively easy. Plus, because it's physical asset, gold is safe from hacking and other digital threats. However, investing in gold does come with its own set of risks, such as theft. But in that case, cars and bikes parked outside your house can also be easily stolen. Yet we still buy them, right? I don't know who started the argument that since physical gold can be stolen, you should not buy it. If gold can be stolen from inside your house, then it's even easier for cars and bikes to be stolen from outside. So that logic doesn't stand at all. Number 3. Gold protects against rupee depreciation versus USD. Gold is often seen as a shield against currency depreciation. When a currency like the Indian rupee loses value compared to another currency such as the USD, then it's called currency depreciation. For example, if you need more rupees to buy $1, it shows rupee depreciation. Since gold is traded globally in USD, so when the rupee weakens against the dollar, gold prices usually go up in rupee terms. This means that even if the rupee loses value, the value of your gold holdings in rupee terms could increase, potentially balancing out losses in other rupee denominated investments. To protect against such currency risk, you should include gold in your portfolio. The idea is that if the rupee depreciates, the rise in value of gold in rupee terms could help offset losses in other parts of your portfolio. Number 4. Gold is great for diversification. You might know that diversification is best achieved by investing in uncorrelated assets. Uncorrelated assets are those assets whose prices don't move in the same direction. Data from the last 20 years indicates that the correlation coefficient between the Nifty 50 index and gold prices is negative, which simply means that when the Nifty 50 goes down, gold prices tend to go up and vice versa. Therefore, gold can be one of the best tools for portfolio diversification, acting as a hedge against the potential volatility of equity investment and also inflation. Number 5. Gold provides liquidity. Gold is extremely liquid because it's always in demand. Investment in gold can be liquidated much faster than other physical assets like real estate. There is no lock-in period in gold investments except for sovereign gold bonds. You can also take a loan against gold in times of need. Now, before we move to section 2 of this video, here's one small request. If you have found this information useful so far, please like this video and subscribe to our community. Your support means a lot. Section 2. Why gold prices have risen so much in recent times. You might know that gold prices have hit a record high recently. What's behind this rise? Central banks across the world are buying large amounts of gold. The trend began with China, whose central bank started buying large quantities of gold nearly 2 years ago. In 2023 alone, China purchased 225 metric tons of gold, more than any other central bank that year. This trend has continued with China adding even more gold to its reserves from January to April this year, bringing its total gold reserves to over 2200 tons. Why is China buying so much gold? One reason is fear. Just look at recent geopolitical tensions. When Russia invaded Ukraine, the United States and European governments confiscated, that is, took control of about $300 billion of Russia's foreign currency reserves, held in Western financial institutions or banks. This action by the West has made countries like China concerned, and so they want to avoid a similar situation. China holds a large amount of US dollars, over $3 trillion as of last month. For context, India has around $600 billion. So China is diversifying its reserves and not relying solely on the dollar. They are buying more gold as a form of insurance or hedge against such actions in the future. In fact, not only China, but other central banks are also diversifying their reserves by buying more and more gold, like Turkey, India, Kazakhstan, Jordan, and the Czech Republic. India in particular has seen a surge in its gold purchases, reaching almost 2-year high last month. The Reserve Bank of India now holds over 800 tons of gold, worth more than $50 billion. So now the central banks of many countries want to reduce risk and not depend too much on a single currency or instrument like the US dollar. That's why they are buying so much gold. Another factor driving the gold price might be that in China and other countries, people used to invest their savings in real estate. But now they are looking for other options also. They are buying physical gold because it is a stable asset that can be kept for a long time and even passed on to future generations. So now you understand why gold is a smart investment choice. It's stable, strong, and protects against currency fluctuations. The fact that central banks are buying more gold for extra security demonstrates its lasting value. For regular folks like us, adding gold to our investments can reduce risk and provide safety during uncertain times. And please stop comparing gold with equities or mutual funds to decide which is better. Rather, consider keeping both in your portfolio. Each asset class has unique benefits and can complement each other to create a balanced and resilient investment strategy. That's all for now. Please feel free to leave any question or comments below. Thanks a lot for your time, and let's take care of this beautiful world. I'll see you next. And smile. Always smile.